Hello guys, what is happening and welcome to this video. So it is not very light, I don't know if you can tell. It looks on the screen like the picture is good, so we'll just roll with it. But in today's video we are talking about real estate supply and demand circles. This is something I came up with an idea myself just to kind of educate people on how supply and demand works in not just real estate but the stock market too. So before we get into it, guys, if you haven't done so already, please like the video. Please subscribe to the channel if you're interested in this kind of content. So without further ado, let's get into it, guys. Let's go. Alright guys, welcome back. So I'm going to put up on your screen right now, it's what I made. Please don't laugh at it. I've tried to simplify it as much as possible. Now, as you can see, it looks like a bullseye. And we've got 321% inside the bullseye. And if you also see in the bottom left-hand corner, each circle represents 1 million in demand. So this is what I'm calling a demand circle. So basically I've put different circles there of demand. So 3%, for example, is 1 million in demand. 2% is 2 million in demand. 1% is 3 million in demand. Now, why have I done this? Because that needs to be explained. Well, the thing is, people seem to forget that in any market which is supply and demand, be it the stock market or the real estate market, there's a certain irrationality to the market. There's also a lot of manipulation that goes on, like speculation, which manipulates and skews prices. But there is also a cyclical nature to that market, which people forget in these times of irrational exuberance, to use one of the previous Fed chairs comments before. But the thing is, when you look at this chart again, and if you look at it, you can see that 1%, you have a lot more demand that's available than 3%. So why is that? Well, essentially, obviously at 1%, the interest rate is lower. So that is increasing the amount of demand that can be available at any given moment to buy real estate. And when you go to 2%, then that demand, it contracts. And this doesn't happen very quickly. You know, we all like to think that when interest rates go up, the housing market will immediately be affected by that, and that's just not the case at all. A lot of people lock in rates with pre-approvals and everything like that, so it takes, you know, anything from 1 to 3 months to have an effect on demand. Now, the thing is, another thing that I want to illustrate with this is the fact that you're actually borrowing demand from the future. When you drop rates, you bring people into the price range that couldn't afford to get in at 2%. They're suddenly now able to get in at 1%. And it basically expands the amount people can afford. Now, in most cases, that happens for like the course of maybe 2 to 3 weeks, because then prices have rebounded completely and you're now paying more to own at a lower price. And the thing is, people forget that when interest rates go down, the demand is naturally going to increase. But of course, here in Canada, same goes for the United States and other countries as well, there is tons of FOMO that is in the market, fear of missing out. And again, FOMO is borrowing from the future. A lot of people overextend themselves in FOMO. A lot of people are speculating when there's FOMO around. And there's a lot of general greed that goes on. So with that being said, let's move on to supply circles now, because I believe they are even more interesting to look at, because forward looking, I believe we have seen the peak in demand. I would be very surprised, and I think the probabilities are low, that we're going to see the same spikes that we had last year. Okay, so I'm going to put this chart up on your screen right now, and as you can see, it's another bullseye. So I did this myself. I thought, it's just the best way to illustrate. So as you can see, again, we've got these circles, and the middle one is the notion that people are going by when prices are going up. So basically, we've got prices are going up, we've got prices are flat, and we've also got prices are going down. So markets going up, we will wait. That is the common notion that happens because people are getting wealthier by waiting. They really don't have the inclination to go and sell their real estate. So they're going to hold off. And we see this in the stock market as well. This is called greed. This is exactly what greed is. This is why people struggle to make money in the stock market, because they just get too greedy when they see the prices going up. They have no out. They don't know where they're going to get out. And they just continue to ride it until it starts coming down, and that's when they exit. But obviously, real estate is not very liquid in the sense that it takes time to sell, especially in a down market when prices are declining. It can be very hard to sell quickly. So by waiting, you are essentially just cutting your legs off. And it's kind of, a lot of people are going to do it. It's always going to be the way. This is 90%, 10%, as in 10% are not going to do this. They're going to work the opposite way around, and then 90% are going to do this. So basically, let's go back to this, and you can see there, markets going up, we will wait. So when markets are going up, we will wait. Supply is going to remain tight, and that's exactly what we see right now. Supply is very tight, and demand is very high. Markets are flat, thinking about selling. That's the next one, because when markets flatten off, people start to think, well, maybe it's time that we sell. And that's when you get that increase in supply. And that's why markets never go like real estate professionals are saying right now, that we're going to see a quote-unquote flattening in prices. Well, that never happens after a big move upwards. We just never see that. Take 2016, 2017 as an example of that. When you have these big runs, yes, we don't know how long they're going to go on for, how big they're going to be, but after it proceeding, there's going to be a pullback of some sort, if not a crash, depending on the economic circumstances. So the thing is, the markets are going flat, thinking about selling, supply starts to increase. And then that literally is a self-fulfilling prophecy, because it turns into markets are going down, I'm selling. And that's when you get even more selling pressure that comes in. And we see this all the time in the stock market. I can't tell you the simple trading techniques that I use very early in the morning. Anybody could do them. But the thing is, you have to think the opposite way to what your mind wants you to think, if that makes any sense. If you are the usual greedy person or fearful person, you'll never make money. And that is the 90% of people in the stock market. And the same goes for real estate. I mean, a lot of the time, yeah, people aren't going to lose money. But you know what? It is very interesting to see that people, when you really think about it, they are losing money off the top. If they wait, then sell at a price much lower than when it was at the top. You also get people who are greedy, and they say, oh, we saw the top at that, so now we're going to try selling a house as the market's already turned. And I've seen that so many times I can't even tell you. But markets are going down, I'm selling. That is when you can get serious momentum to the downside. Because right now, there was a realtor video, I did a short on it a while ago, where he said exactly the psychological thing that I would look for, which is, it was a real estate agent in the Okanagan. I'll try and link the video below. But he basically said a lot of people are fearful that they're going to lose all their equity in their home, and that is exactly what causes a crash. So the fact that he's coming out and saying that, even though a crash hasn't happened right now, that fear is baked in. So as soon as prices start to decline, and they haven't really started there yet, then you're going to see a lot of supply which suddenly comes out of nowhere. And real estate agents, they don't seem to realize this, they don't notice this, and that is mainly because they're trained salespeople. They are not skilled in economics, they don't know finance very well. They like to think that they're very smart because of the exorbitant amounts of money that they make for practically doing what a 10-year-old could do. And I'm not saying that lightly. You know, a lot of realtors are very experienced, they're very good at their job, but I would say they're about the 1%. Guys, and there's a realtor in California, Southern California, called 𝗀𝗂𝗍𝗂. I watch his YouTube and I would say he's one of the 1%. So go watch his channel and then you'll realize what an actual realtor that tells the truth and has your best interests at heart looks like, because most people don't know it. Anyway guys, I really hope this video helped you. I really hope it was somewhat educational. Please share this with people. Please share this with friends and family. I know a lot of you guys will know this already. I made this video to be shared because I thought a lot of people just don't understand the simple, cyclical nature of a market, and that's exactly what we're explaining in this video. So if you haven't done so already, guys, please like the video. Please subscribe to the channel below. It greatly helps out our videos just get out there more with the YouTube algorithm. Anyway, guys, I will see you in the next video. As always, peace and love. Bye now.